I guess the question I want to get to is, should central banks be looking at the Taiwan example and be on guard to intervene in case there is excess speculation to the upside in their currencies? And which specific currencies do you think might be candidates to see a Taiwan that we did on Monday?
Well, I think that probably everyone. If you mentioned, record levels of intervention from HKMA, if dollar-yen moves started to become, as disorderly, if you like, as the moves that we've seen in the Taiwan dollar, then I've no doubt that the MOF would be instructing the Bank of Japan to intervene. But really, they're kind of standing in front of a runaway train, and I think that all they would meaningfully hope to do is to provide liquidity and perhaps to slow the speed of ascent. Central bank intervention is not going to prevent these sorts of moves. Similarly, interest rate moves are, they can't defend it through raising interest rates. In fact, the tendency is going to be to add to downward pressure on central banks to ease policy in order to provide a kind of an offset, because if the currencies are appreciating dramatically, they're undergoing a significant tightening of monetary conditions or financial conditions. And one of the ways, at least, to partially offset that is to have lower domestic interest rates. So I think these moves are actually adding to the pressure on central banks to cut rates, which, ironically may have the effect of, ostensibly it would weaken those currencies, but I don't think that relative interest rates in this situation are going to have a meaningful effect on currency volatility.